All right. Should be up on YouTube. Should be up on the Pro Desk virtual trading floor. And I got 30 seconds to spare. Was able to get up on time. All right. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here we go with the position disclosure. Got stopped at a Fubo today. Bought small apple. Those are the differences. All right. S&P today closed up 1.3%. Nasdaq a whopping 2.25%. IWM a very disappointing flat negative close here. Let's talk about it. Okay, so I said in the morning meeting, and the title of today's afternoon meeting is being patient with the market, right? And I said in the morning meeting today, like, we were honestly opening up at the perfect price. So, for recap, we're coming off Thanksgiving weekend. So Thursday markets closed, Wednesday markets a half day, and then we had the weekend. And I actually had posted a video on YouTube early last week in the Derrick the Trader YouTube. I don't know if you guys saw it, about trading on holiday sessions. And it's funny because what I said there was exactly what happened. Typically, holiday trading sessions are extremely boring. The Thursday after Thanksgiving is typically the slowest day of the year. Usually the volume candle on that Thursday after Thanksgiving is like so low. It's like a quarter of a typical day, even though the market's only open for half day. But what I did mention also in that video is every once in a while, if a big event happens, it can actually create like an insane trading session because people are scrambling to be in front of their computers. Volume is usually thinner. Liquidity is usually thinner, I should say. So because there's lesser liquidity and people are away, that you can get crazy market movements if an event actually occurs. And sure enough, that's what happened, right? Wednesday, the market closed great. We had a really strong day on Wednesday. A lot of those beaten up stocks that we had been looking at as a team closed great on Wednesday as well. I was super excited to go into Thanksgiving with how the market was closing on Wednesday. I went out to my aunt and uncle's house out in Shelter Island. They made an amazing meal. And, I brought my computer around figuring, maybe I might need to trade the open or whatever. And I was hoping to even avoid doing that. I was hoping just to be able to relax and chill. So, of course, I wake up early and look at the futures on my phone to see, are the IWM futures really down 3+%? Like, am I reading this right? And then it was like, okay, I guess this is not going to be the relaxing Friday after Thanksgiving I was looking for. I felt bad. I'm like sitting there, like trying to work and trade and answer email and be in the VTF and manage positions, like while people are eating breakfast around me. But Friday was crazy. And what I kept saying, I never spoken to the VTF on Friday, but what I kept typing in on several occasions was, I don't see why any buying would come into the market today on Friday. You got this half day, you have all this uncertainty. No one knows what's going on with this new COVID variant. Oil is down massive. At the same time, these interest rates are supposed to start going higher. And all this is kind of coming together with this perfect wave where why would anybody take overnight risk into this weekend with so much uncertainty out there? Why would any bids really come into the market? And sure enough, if you look at the price action from Friday last week, yeah, we tried to uptick for like 5 minutes in the beginning of the day. And that was a hard, fast uptick on the first 5 minutes, by the way. And even once I was saying, again, typing into the VTF, if this opening low breaks, like looks like we got our opening low, that breaks, get out of the way. That broke, you had to get out of the way. The market was extremely weak. We tried to stage one more rally here from 12 to 12:30. That totally failed. We made new lows and we closed, extremely weak. Because, again, who wants to take risk over into a long weekend like that when you don't know what's going to happen? So then, of course, we get some new information over the weekend. That new information did seem to be generally positive. It sounds like the cases of COVID coming from this new variant, the symptoms are relatively mild, is what we're hearing. It sounds like the current COVID vaccine and boosters are mainly going to be able to do their job. And you also have the Pfizer and Moderna CEOs saying that, if an adjustment needs to be made to the vaccine, that could be done within, like 90 days or so, which is a really quick timeline. So that's all generally positive information. And the market, what I said this morning in the morning meeting, the market gapped up to basically exactly where it should. We had a solid gap up, depending upon which index you were looking at. The S&P, Nasdaq, Russell, we're all gapping up a percentage point or more. And the SPYs here, first thing we looked at in the morning meeting, was set to open up like near this, a little bit under this 465 area. I think we actually ended up opening up a little bit below that. Where did we open today? 464.07. We might have been a little bit higher pre-market at one point also. So, and I mentioned like an open here at 465, it's actually perfect. It's like what the market should do based on the new information, but it makes it really difficult for us from a trading perspective because look at the technicals here, right? The market is not oversold at all. It's opening perfectly in its equilibrium zone. It's opening right at some previous support in this 465 area, which could act as some resistance. It's doing that with a large common gap up. So the buying opportunity is really kind of gone, right? That's all happening over the weekend. And again, you had to be a little crazy to be putting on a lot of new risk on Friday with all those variables coming out. There was no way to know, based on what I saw, like early on Friday, and the news even coming out was very thin also because of the holiday session. It was very difficult to know, like, is this new variant something that we're going to be able to overcome easily, or is this going to be like resistant to vaccines and significantly more deadly than any other variant we've seen? So you have to be crazy to come in and take on a lot of new risk without knowing any of that information. But now, and this is actually a weekend where I really wish the market could have been open for Saturday and Sunday, so we could have traded and had that volatility coming in as the new news kind of came out. But we didn't have that happen, and by the time Monday opens up, we're opening in the perfect area for the market to be difficult, and it's a huge gap up higher. That's the SPYs. Look at the Nasdaq. The Nasdaq doesn't even look like anything happened on Friday, except it looks like a normal trading session on normal volume, even though it was a half day. The pullback in the Nasdaq here to go a little bit below the 21 EMA, probably a little bit deeper than people would like, but didn't even breach the pivot low from November 10th. So Nasdaq looks totally fine. But then your other pictures, you look at the IWM, and it was like complete destruction. The Russell 2000 was down over 5% at one point on Friday. And yeah, this one staged the best rally off of its lows and closed a good bit off of its intraday lows. But this one, if anything, was even into today's gap up, was still oversold. So this is the only one that really had more room to run to the upside. But just based on extension rules, right? Obviously, it's the most relatively weak. The Nasdaq's the most relatively strong. So if you're focusing on relative strength, you're better off buying the Nasdaq. If you're focusing on extension, then you're better off buying the IWM for some sort of mean reversion type of trade. but we had everything gapping up so big this morning that we have to take this big picture, all this information I'm discussing right now, is to take this big picture, and then we have to break it down into a small picture to figure out, well, what should our game plan be for this morning based on the fact that the market is appropriately digesting this news with this relatively large gap up. I think the IWM was up 1.5% at one point. SPYs are up a percentage point. Like I just said, these SPYs are opening up at a really difficult spot. So what do we do? And what I was saying, and I even had to interrupt myself more than once in the morning meeting today as we were reviewing individual stocks, because I had a couple chart patterns I liked for today on some individual stocks. You guys brought to the table some chart patterns that I liked as well. But I had to keep saying, keep reminding everyone, including myself, even though we like some of these chart patterns, the market with where we're gapping to says to be patient. Let's be patient, and then let's take a look intraday, 15 minutes in, 30 minutes in. I even said at one point in the morning meeting, it might take a full day of trading before we have a little more insight into how this market feels. But at least be patient for that first 15 to 30 minutes, because we're going to open up so extended to the upside on these small time frames. You can't just come in and be aggressive. So the game plan this morning was be patient, and if anything, if anyone did have longs that maybe they were trapped in, or that they just somehow were still able to hold on to despite Friday's price action, that this gap up was a great opportunity to take some risk off, or to put on some hedging type trades, short the market or whatever it is, if you wanted to continue to hold those longs. And that was the most important thing about today. The most important thing about today's trading session, which again, I just to say it again, I emphasized this at least 4 times in the morning meeting. The most important thing about today was being patient at the open. The gap was just too big, and we were opening in like too perfect of a spot based on the new news to have any type of aggressive market action. And just be patient, and let's see how we're able to digest things, and then see if there's an opportunity. And then once again, if we look at the intraday price action, the SPY, Qs, and the IWM, we're going to have a very different picture here. All 3 of them tell us the same thing in the beginning, though, which is be patient. Look at the S&P here, which is the one I have up right now for the 5-minute chart. There really wasn't anything to do in the S&P until like 11:30, 12. And who's trying to put on a lot of new longs at 11:30, 12? I'm not. That's when you want to be most selective from a time frame analysis point of view. But look at this opening price action, right? Huge gap. So a lot of backing and filling. And I think I even said here at like 10:15, this is actually some of the best price action you could hope for if you're a bull, which is for us to just go sideways and digest this big gap. And then I mentioned, 10:15, 10:20. All right, well, now we got to be careful of a little bit of a pullback for a 15-minute correction, because we all know, because I say it in the VTF so often, that as we approach like 10:15, 10:30, that's when your 15-minute time frame becomes significantly more important. So we spend the first 45 minutes of the day more or less going sideways, backing and filling here, enabling the 5-minute correction to occur. But once the 5-minute correction is done, it's 10:20. Well, at 10:20, we're not looking for 5-minute corrections, we're looking for 15-minute corrections. And look at what the S&P did. Gave a perfect 15-minute correction, pulls back to about the 80 MA on the 15, followed by an inside 15 and up. And it was really only at this point, if not even later in the day, that you could have started looking for longs. So I really think that the key to today's trading, and it's not easy, is to be super patient until like 10:45, 11 o'clock. Once that time correction, price correction on both the 5 and 15 were fully complete, did we actually have opportunity to come into the market where you could have come in and done some buying. And look, that's very difficult. It's very difficult for me. I like to be most aggressive off the open. I like to be doing most of my trading off the open. That's when I feel like I generally have the greatest advantage, because there's a lot of, stocks are thinner, they move faster, there's price dislocation from the gap that's getting satisfied over time, and you can take advantage of that. So to have to wait until a time of day when I don't like to trade, which is from 11 to 12, I don't like doing a lot of especially new trading initiation post 11 o'clock. It's definitely difficult, but patience was the key. We can do a quick analysis of what the Nasdaq and the Iwm did as well. Nasdaq showed the most amount of strength here very early on, and it's impressive because the TLT was gapping down this morning. I know it grinded up here for most of the day, but this gap down in the TLT meant that interest rates are moving higher, so you wouldn't necessarily think that the Nasdaq would be the strongest sector that's out there, though I think we have seen a little bit of a flight to safety in your Apples and your Googles and Amazons again. But all the same, very quickly, you can see the relative strength of the Nasdaq. The Nasdaq also, though, is really giving a time correction here until like 10:35, 10:40. So it's both like a 5 and 15 minute time and price correction that's similar to the SPYs, but with more relative strength, right? You can see that the SPYs into that 10:45, 15 minute correction were breaking lows. The Nasdaq was not breaking lows. It was just having a pullback. Look at the 15-minute chart here of the Nasdaq. It was the same thing, except this is just a pullback, not new lows, as the ADMA catches up, and then finally you get some upside continuation. And again, look at this just this 15-minute chart going back for the last week or so. This looks normal. It just doesn't look. It looks like nothing even happened on Friday. But now we go and we look at the Iwm, and that's where things were really happening. Once again, so the degree of relative weakness, I don't know if I should keep being surprised by this because it happens so often. The degree of relative weakness in the Iwm surprised me. Not the opening price action, not the fact that it was relatively weak. That didn't surprise me at all. The degree of weakness, the fact that the Iwm spent most of the day flat to red, considering that it was up 1.5% at one point pre-market, considering the degree of downside extension, considering the tail and the volume from Friday. I'm not surprised to see weakness. I'm not surprised, especially to see this opening pullback. I'm just surprised by the degree of weakness. I was speaking about 224 in the Iwm. I really wanted to see this low here from 950 hold. This was some resistance from Friday, from the 1230 failed rally that the market had. I want to see that hold as support, especially right as the ADMA is catching up. And you can see here it tries to pivot, and then before this third bar even closed, though, before it even closed with weakness, I was like, this market's just not acting right. Like that, we should have been able to sustain a bounce off of this 224, off of this ADMA. We couldn't get it. We got continued weakness. We lost 224. You can see the market trying to recapture the 224 spot that I'm discussing on these 3 5-minute bars and just running into a wall. Unable to do it. New lows come in. This isn't even a 15-minute correction. A 15-minute correction, you still would have been looking at holding 223. Nope. Fully fills the gap, goes negative, disgusting relative weakness. This thing is unable to catch a bid at all, even at 222 with the ADMA on the daily chart all the way up at like 230, $8 of downside extension. Hugely extended the downside, and just no bid could come in. And at the same time, to my disappointment, just a whole ton of stocks are just so weak along with the Iwm. And this has been a consistent theme here, really even going back to the summer. Most of the summer we saw a lot of this. Just a consistent poor breadth. At one point, like my watch list today, if you take out Tesla, Apple, Amazon, and Microsoft, my watch list was like every stock on it was red. And it was more representative. They were even weaker than the Iwm. And that further disappoints me. Now, if we move away from the stocks and the indices and we start looking at individual stocks, so I got stopped out of this FUBO today for a nice fat loss, and of course now closed over $1 above where I got stopped out, so that sucks. But it is what it is. It's part of trading. You have to manage risk, right? Like some of these things I thought looked so good on Wednesday and even on Friday, and then they were just complete disappointments today. PayPal, complete disappointment. They'll end up closing with a little bit of a tail. DKNG, complete disappointment. Fubo, more of a focus for me. I had spoken about this $20 spot and then was pumped, got really heavy on this on Wednesday and was pumped by the strength. It closed really well. I'm like, all right, Wednesday, I'm heavy, market's closing, I'm swinging this stock, I'm being greedy, I'm looking for a move back to $24 in this. Friday comes around, pre-market, I'm like, oh my God, I'm going to get smoked in that Fubo position. I took all that stock. Friday comes around, and this thing, along with those other names, along with SoFi and PayPal and DKNG and a whole bunch of those other beaten up stocks that we've been looking at, they honestly held in so well on Friday, especially when you consider the IWM was down 5%. A lot of times those stocks, just because they're beta, whatever you see from the IWM, which is what I find that they're most correlated to, you get a multiple on those stocks. Like if the IWM is down 1%, those stocks are down 3, 4, 5%. And if the IWM is up 1%, then those stocks are up, like several percentage points is what you kind of tend to see. And I was so pumped, even on Friday, where everything was so brutal. I was really happy to see that Fubo was able to tick green. Didn't close green, but was green at one point. IWM was down 5%. Fubo could have been down 15%, and yet was managing to tick green. Sumo, same thing. PayPal, same thing. DKNG, same thing. So in my brain, when the market closed on Friday, am I nervous about everything? Sure. But the silver lining in my emotional state on Friday was that those stocks that could have been down 15% on no individual news, but just because the IWM was down 5%, closed flat, were green intraday, and I was like, all I need is for this to not be a terrible scenario with this new virus and everything else, and these stocks are probably going to explode on Monday. So that was my thought process, and that thought process was wrong, I guess. Though maybe it's not based on how this Fubo actually closed, but it was wrong enough to stop me out of the position. So, okay, fine. Market's gapping up really big. Today, we know we should be patient on some of these stocks, but broadly, I want to see that same strength. Like, in my brain, I was like, this Fubo was so strong on Friday, strong on Wednesday, so strong on Friday, that if the IWM was flat on the day, this thing probably would have been at $23. So that's what I'm looking for today. Let me get this upside follow-through as the markets are actually holding in because the news isn't as bad as it potentially seemed to be on Friday. And these names just totally stunk up the room. They were so weak, so early. Once again, it was the Tesla show, it was the Apple show, and everything else was garbage. Garbage. This price action here, the gap up, followed by death in this Fubo, to lose lows, I got stopped out below 20, was just awful. DKNG, this price action was awful. PayPal, look at this gap up, failure. I couldn't believe it. I'm talking about downside extension hammer buy in PayPal, which actually worked out pretty well if everybody took that. Talking about a downside extension hammer buy in PayPal on the VTF at 9:45 this morning because of downside extension when the market was gapping up over a percentage point. Unreal, honestly. And that trade actually worked out pretty well, but unfortunately, for me at least, this Fubo, which I had size in, it didn't really give that same setup that PayPal did. This thing continued to be weak all the way through 10:30. It lost that level. It hung out below that level. The responsible thing to do was to take the loss because you have to manage risk. And this thing should not, it inherently showed you that something was wrong. This thing, given the strength on Wednesday and Friday, should not be having an inside day and down. It should not be losing the pivot low it had on Tuesday. And that's exactly what happened. So what else can you do except manage your risk? Which unfortunately for me meant realizing a pretty sizable loss. And it was just disappointing price action from the IWM, which honestly the IWM looks terrible. Even now, the IWM Nasdaq looks fantastic. IWM looks terrible. And I don't think... Can the Nasdaq stay relatively strong? Sure. Can the IWM stay relatively weak? Sure. But I don't think that this degree of separation can continue. I think something's got to give on one side or the other of the market at some point. And honestly, though, that doesn't even have to be until the new year. It's a very realistic situation that, because of tax loss harvesting and things like that in December, that we don't see a resolution to this problem until 2022. With that said, historically, which doesn't mean anything for right now, historically, the Russell 2000 tends to be the strongest index in the month of December. If that were to continue that historical trend this December, that's going to mean that we're going to see mean reversion in December. But just because something's happened in the past, obviously, there's no indication that that can happen in the future. It could sure go ahead and be, plenty relatively weak, and the Q's plenty relatively strong into the month of December. But for me at least, taking that Fubo loss was not fun. As far as other individual trades, though, considering that we were looking to be patient this morning as a broad game plan, there was some good stuff out there. There were certainly some things that, we spoke about that did not trigger at all, but there was also certainly some stuff that was great. Several of you guys were saying that AMD was your idea of the day. I know Big Z brought up AMD as one of his top 3 stocks. Brant said he loved what AMD looked like. I think a couple of you other guys were all about AMD today, and this thing was phenomenal. Along with the relative strength in the Nasdaq. This thing was great. I discussed a potential buy, I think, in the morning meeting above 158. I did discuss also being patient, which you would need to be. Like, this price action intraday was very difficult. But if you were able to actually get it by being patient and waiting for that time of day that I don't normally like, between 10:30 and 11, to start looking for your executions in relatively strong stocks, because now the indices were telling you that was the right time, and you're able to capture that AMD, then it was solid. If not easy, definitely solid. LAC, I think Dave brought this to the table in the morning meeting in the VTF. Great call out, beautiful pattern, really bullish stock. This is a technical descending bull flag here on the daily chart, ending with an inside day into the ADMA. I love the setup. We saw bull flow coming in on the VTF in LAC, so that's an extra layer of probability. The volume was on point. The momentum came in early, so if anybody caught that, it was also just a really solid trade today. And then there were some other things this morning that were a little bit difficult. I mean, I know we spoke about LI because its earnings report numbers look good, but that was a difficult trade. I know we spoke about looking at Hertz because of its buyback. That was a difficult trade. It did not hold 25 at all. But again, just broadly with everything across the board, even things like AMD that did end up working, you had to be patient today. The only one to not be patient on was this LAC, but trying to choose the one out of a dozen that you did not need to be patient on is very difficult. So I do think that today was a difficult trading day, but I think that we were prepared for that ahead of time. So I think, as everybody knows, one of my big themes for successful trading is know when to be patient and know when to be aggressive. Because if you're aggressive on days where the market tells you to be patient, it's a recipe for taking losses. And if you're patient on days where the market tells you to be aggressive, it's a recipe for not making money. So as far as a big picture game plan today, we were totally on point to do the right things to, if not make money, definitely save money. So I hope everybody is doing okay. And that's all I got. So I am happy to add to any questions. Oh, and the team over at T3 Live wants me to remind people that there's a Cyber Monday deal where you can get 65% off monthly virtual trading floor subscriptions. And there's a link to people who are following on YouTube in the description to check it out. Anyway, let's go into our Q&A. Let's go into our Q&A session of today's afternoon meeting. Let me scroll up here, looking for questions. First thing I'm seeing is from Robert. A couple meetings ago, you mentioned that psychology of gaps doesn't have to work every time, and it is just theory, okay? Do you have any closer points to talk about on how we can recognize if today we can expect to fade the gap up, down, and other days not to, please? Thank you. Sure, so the thing about gaps is that gaps are really not a trade in and of themselves. Gaps are an important layer of probability on trades that you might look at. So for example, today is a large common gap to the upside. So that usually means, technically common gaps get filled. Common gaps definitely don't have to get filled 100% of the time, but a large common gap to the upside in a non-extended market, which the SPYs and the Qs are definitely not extended because of today's gap, means patience, because we need to wait for that backing and filling to come in, because those gaps usually get filled. Is this market going to fully hit this all the way down and fill its gap like the Iwm did? Is there going to be more of a time price correction like the SPYs and the Qs did that can then set you up for an actual trade? So, again, gaps they're not 100%. There's no 100% in trading. Breakaway gap does not always lead to a gap and go. A common gap does not always lead to a full gap fill. But we want to utilize that to understand probability of success for the trades that we're actually looking at. So for example, if you're looking at a breakout or an inside and up on a daily chart today, or a breakout trade today, is the market with you or against you because of the gap? The gap is going to be a layer of probability against buying a breakout. It's going to be against that inside and up, which is why, for so many of the ideas that you guys had, we're looking at these good-looking daily charts that held in really well. And I was just like, guys, we got to just be patient on these because of the markets. That's where the whole thought process comes from. It's about utilizing that for probability. It's like I've said this plenty of times in the past. The risk-reward aspect of trading is really easy. How much am I going to lose for how much am I going to make? It's the probability part that's extremely dynamic. We're analyzing all these market variables, gap variables, relative strength, relative weakness variables, and trying to put that together in a picture that gives you a broader degree of probability of success in any trade that you're actually looking at. And that's also where kind of the big picture game plan comes from that we were discussing today. So Robert, I hope that helps. Next from DJ, is the IWM mostly just relevant for smaller cap stocks, or the IWM being down can have an effect on the overall market? So it's a good question. So the Russell 2000 is mostly made up of small cap and mid cap stocks. So it's gonna be most relevant for smaller cap stocks. But typically, and I think I spoke about this a little bit in an afternoon meeting last week. Typically there is a degree of correlation between the indices. And that's one of the things I was talking about, I think at one point last week, maybe it was the week before that, where the degree of difference on the strength of the Qs versus the weakness of the IWM is becoming abnormal to me. Usually it's like a general rising tide, and that enables all the indices to move higher, but maybe you have certain sectors, maybe it's the tech sector, which would lead to the Nasdaq being relatively strong. So the whole tide is rising, but this is rising fastest, or the opposite. The tide's going out, everything is weak, the entire market's weak, but tech is maybe the most weak, right? And that's going out the most. So, if you're looking at the IWM, does it have an effect on the overall market? Yes, it does, because of what I'm describing. There's going to be a correlation there, but it's going to have the most effect on small caps and mid caps, and sometimes those degree differences can happen for longer periods of time. That's kind of what we're seeing now, and like I also said earlier in the meeting, that could continue to happen. That could happen for the entire month of December. We're just going to have to wait and see. Next here from Justin. I have noticed recently that the market has been turning during the 11 to 2 hours when it is recommended to not trade as much. So there's definitely a midday reversal is definitely a very real thing. I have realized this happening for the last few weeks or so. What do you think of trading the SPY's cues during these hours when you see a pivoting candle or pattern? So sure. So there's definitely such thing as a midday reversal, and that can be an actionable setup. And if you're seeing that happen consistently, which is not something I've personally noticed, but if you're seeing that happen consistently, it's something to note, right? Because market environments are constantly changing, and I definitely, even though I haven't personally been noticing that recently, I definitely have seen periods of time where midday reversals were happening relatively consistent, and being prepared for that. I still don't like trading midday unless there's something really going on. For me, midday is going to be primarily about open position management, and if there's new positions, there are certain days, honestly, even like Friday, where there's so much price action, there's so much volume, that the market stays in play all day. And you can trade nonstop from 9:30 to 4 all day because the entire market's in play, things are moving, the volume is big. That happens sometimes, just not that often. And on the days when it's happening, that's a day to be potentially aggressive and sit there banging away at the keys all day. But for the most part, if you sit there banging your keys all day, midday, and I know based on the statistics, a lot of you guys who are traders here, midday is when you're going to end up just giving away profits. And you don't want to do that. So, if there's an opportunity, go for it. No one's going to say not to. Just recognize that you want the market to still be in play. You want extension. You want volume midday. You want something to be there. If the market's just sitting around on the 8 and 21 EMA on its 5 and 15 minute charts since the middle of the day, I don't think you can count on a major pivot happening. Next here from Robert O on YouTube. What do I think about BABA? Sure. Look, I love the fundamentals of BABA. This name is also on the weak, on the naughty list as we come into. I'm gonna start calling all these relatively weak stocks maybe the naughty stocks because we're approaching Santa Claus. BABA's on the naughty list. The market has given it coal for Christmas. This thing is it's gross. It's so gross. I'll say the same thing I've been saying for months in BABA. Love the idea of the company. I am bullish on the Chinese consumer. I'm bullish on a company like Alibaba. I think you almost can't even compare the fundamentals of Alibaba versus like an Amazon. Now it should trade at a discount to an Amazon because there are inherent risks in being a non-US company, being a Chinese company. There's definitely inherent risks to doing that. But I know some of you guys in the VTF here were chatting about BABA's fundamentals, and I thought I saw somebody say that they have cash on hand. If you take away debt, it's worth $100 a share. It's almost going to be trading at its cash value soon. So I think it's ridiculously oversold. I think it's a fundamental buy. I think that I'd like to buy some in my retirement account at this point and just let it bleed out a little bit if it wants to. But I'm still very bullish on BABA. JD has been my preferred company. I've been saying that for a while as well. I preferred JD over BABA for the time being, but I still really like BABA. But you can't just catch a falling knife. You got to wait for a signal. And we talked about BABA in the morning meeting today. It got this wacky downgrade from Goldman. Otherwise, if it wasn't for that wacky Goldman downgrade, I would have liked it for today. Really extended the downside. Like a lot of the other names, strong on Wednesday, held up just fine on Friday, also with an inside day on Friday. I would have liked the idea of being long Alibaba versus Friday's high or Friday's low, possibly, depending on how much room you want to give it. But I kind of shied away from that in the morning meeting because it got this weird downgrade from Goldman. And honestly, the Goldman analysts are the worst. Of all the sell-side analysts, I've been saying this is a conspiracy theory. I have nothing to back this up, but it just based on price action. It seems like whatever the Goldman analysts do, the stock oftentimes ends up doing the opposite, like right away. It almost looks like, I'm sure they would never do this. It almost looks like they downgrade stocks so they can be on the bid to buy them in the opposite. But all the same, wacky Goldman downgrade, I'm going to stay away from it. They downgraded it from conviction buy to buy and put the price target at $215. Is that even a downgrade? It's not a conviction buy anymore. It's only a buy because we think the stock's going to 215 from 131. Okay. So we stayed away from it. I think we just got to wait. I also saw some chatter about BABA being a candidate for delisting in the United States. I'd like to read whatever you guys were looking at on that because I personally see no indication of that occurring at all. But I'd be interested in reading whatever you guys were reading about it. Steve saying that Goldman not saying they would do that, but others surely did, particularly AIG during 08 and 09. Anyway, BABA here is very extended to the downside. You just need a signal. You need a signal to come in and actually buy it. Okay, what else do we got here? That was from Robert. Mr. Steve NYC talking about Twitter. Yeah, we should talk about Twitter a little bit. They wrecked us, Twitter. Twitter gaps up big with the news of the Jack Dorsey resignation, but then tanks with news that the new CEO is even worse than Dorsey. Is Twitter a short? So I know nothing about the new CEO of Twitter. I think he's the former CTO or something like that. And, Paul Singer, that's Elliot, right? Paul Singer? Yeah. I'm pretty sure it's them who have the big stake now in Twitter, and they, transplanted themselves on the board. I mean, everyone knows. It's been my big pet peeve for a long time because I was long Twitter, and I actually did really well with it. I was long Twitter and trading it all through this, and I caught this on the way up. And I remember I was trading Twitter at $35, telling everybody I was looking for a move to 70, and, look at the chart. But I was saying that, and part of the reason I got really behind this thing was because Elliot and Paul Singer took such a big stake in Twitter, and they were trying to get board seats, and I've been saying forever that Jack Dorsey's got to go. The only way that Twitter can be a better company, Twitter has been the worst under Jack Dorsey's leadership. If you look at Twitter's performance from its IPO, it is basically where it started back in 2013. It's basically exactly where it IPO'd. If you look at where Facebook was in the same time in 2013, look at what Facebook's been able to return for its shareholders. I moved from 46 to now it's at 337. Same period of time, Twitter has gone nowhere. And it's because of the negligence of management. It's because of the negligence of Jack Dorsey. Jack Dorsey long stopped giving a hoot about Twitter and only cares about Square. And to me, that is just just how could you have that be the CEO of this company? And that performance of him as CEO is reflected in the stock price. Twitter has so many users, and they have never found a way to properly monetize those users. Snap's been able to do it. Facebook's obviously done it. Twitter was there well before Snap. It's kind of the incumbent and just has just been garbage. So Jack Dorsey's needed to go. I know nothing about the new CEO. I know nothing about him. I liked Brandt's point that he was making in the VTF earlier today that the new CEO wouldn't be CEO if he didn't have Paul Singer's blessing. So that can't be a bad thing. I don't know why they sold Twitter off to the degree to which they sold Twitter today. They fully filled its gap and had it go negative. The only thing I would note is that The other social media companies were also destroyed today. This Pins, which is also on the oversold list, gave bear flag continuation. Pins closed down 5% today, and that's after it's already down. Where's my page? That's after it's already down 15% into this month alone. I think I did this with Dylan on Wednesday, so it doesn't include Friday or today. It's down 15% on the month alone, and down 54% on the year, and it's still closed on lows. Snap as well. I know Snap had a bad earnings report. I mean, look, these stocks are being negatively impacted by Apple's new rules, and it just is what it is. There's a fundamental change on the company when Apple decided to care about people's privacy rights, which is cool. Snap's also given a bear flag here. So Snap down 2%, Pins destroyed. So something's to be said about the general weakness on these stocks. Maybe it's too little too late bringing in the CEO, but Jack Dorsey needed to go, and I definitely praise the board of directors for finally giving this guy the boot, though he's going to still maintain his position on the board of directors. So, yeah, that's that. It's their former chief tech officer, yeah. So I don't know. I don't know anything about him. Robert's saying they need someone from the outside to bring Win into the business. Yeah, I probably. So maybe this shift is just maybe there's a power struggle going on here, and Jack Dorsey doesn't want to give up full control, but he did need to go, and they're just putting in like a front man for Jack Dorsey, and there's no real effective change, and the market just doesn't like it. I don't know, and that's the best Paul Singer could get. I really don't know. But we'll see. I'm glad Jack's out. All right, gang. Looks like I covered all the questions. It's almost 5 o'clock. I'm not seeing anything new coming into the VTF, and I don't have direct access to the YouTube. People usually copy and paste it in for me, so it looks like we covered it all. So I'll end the meeting. It was an interesting day today. Hope everyone's continuing to learn. I do think today was more about conserving capital than making money, but that's just what the cards were dealt to us with the way that we had this gap up. So have a great night, everybody. We'll pick it back up in the morning.